Joining me right now is Oxbow Advisors Managing Partner Ted Oakley is here. Joining the conversation all morning long this morning is Fox Business's Dagan McDowell and Michael Lee Strategy founder Michael Lee. Great to see everybody this morning. Thank you so much for being here. Ted, kicking things off with you. What are you expecting on the Fed pick from the president this week?
You know, Maria, I think he'll go with Powell. I think it would really upset the market quite a bit if he changed at this point. I think he owed it to talk to Brenner because he considered her also for the Treasury Secretary as well, if you know before. But I think he'll go with Powell.
We'll see. And you think it will be a market mover if he doesn't? You think markets will respond negatively with a change at the top of the Fed?
Well, you know, she has obviously a looser money bent to her. And if you're looking at inflation, which he has his eye on right now, he's going to have to think about that because the market will look at that and say, hey, more money, chasing more goods, and here we go.
Yeah, well, inflation is certainly something I want to ask you about in terms of how you're allocating capital. We've got a new CBS YouGov poll this morning. It says 67% of Americans disapprove of President Biden's handling of inflation. These bad numbers follow a recent Fox News poll indicating inflation and surging prices are the top economic issue facing the country right now, Ted. Has it impacted the way you're allocating capital?
Well, it has to a degree, Maria. I mean, we have three strategies, but one strategy, we have a lot of inflation items in it, from energy to fertilizer, timber, metals. And so to that degree, it has, yes.
And so do you want to be buying sort of inflation hedges here? How are you allocating capital?
Well, I think you have to look at it from us. We have a growth strategy which we put money into, but on the inflation side, we've owned energy now about a year, and I know it's pulled back recently, but it usually gets a little weaker, you know, in November and early December. That's not surprising. So we have those as well, and so if you look at our capital right now, we have about 25% liquid across the board too. Haven't been able to find that many things, but we think we're in position for both sides of that. We have both sides. We have growth and we have inflation hedges as well.
Yeah, I mean, we're looking at huge price increases across the board on food. Let's look at crude oil, now about a 7-week low this morning amid concerns on excess supply as Japan weighs releasing its oil reserves. Oil prices this morning at $75.96 on the price of crude. We are also having an eye on COVID lockdowns in Europe and this economic fallout there as well. Your thoughts on the state of oil as we enter this busy holiday travel week? You want to buy oil? You want to buy oil producers? How do you want to trade this level of oil?
You know, Maria, we would be a buyer here. I think we're in a position, you know, you've come from 85 to 75, say, and you're in a position right now to where you can buy producers at a much better price. Yeah. You know, we own Chevron, we own pipelines. And we own some mineral companies as well. We like those here. You have to remember that the president cut out 25% of the supply in January when he nixed the federal lands. And then if you look at their strategic reserves, just for a number for you, you know, we have about 700 million plus. We're using 15, you know, it's about 45 days worth. It's not that big a deal.
Yeah, I mean, it's a great point to make. It certainly has been a good place to be in this market. Michael Lee is with us this morning. Go ahead, Michael, jump in here.
Yeah, hi. Given the size of the Fed's balance sheet and that we're just starting the taper now, and rate raises don't seem like a realistic occurrence until some point in the middle of next year, what do you think the Fed can do to tackle inflation regardless of who Joe Biden picks as the next Fed chair?
You know, Michael, I think they're between a rock and a hard place here because if you stay sticky on this inflation number at 5 or 6%, it's going to be very hard for them to say, hey, we're just going to keep easing as slow as they're going, because I think they'll have to make a statement and either pick up the pace and stop buying as many bonds, or if it gets worse, have to even go into the marketplace. But I think that's their trouble the next 90 days. You'll have to see how it plays out.
All right, we will leave it there. Ted, it's good to see you this morning. Thanks so much.
Thanks, Maria.